Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Prashant and Sonia as always, and we have a screen which in 2 days has turned upside down. It's like that, just 2 or 3 days back the market could do nothing wrong, and now nothing's going right. In fact, if you look at the Indian context, the global cues, just briefly I mentioned all three are negatives. The dollar, the bond yields and crude all have inched up. From our market point of view, we want all of them lower. The dollar index, in fact, very close to 52-week high. The US bond yield above 3% and Brent crude above the 97 mark. So clearly there's a clear risk off which is on right now. Let's see if the Nifty takes support at that 20-day moving average, which comes in at 17,340. If we get there, guys, hi, good morning.
Hi, good morning, Anuj. Morning, Prashant. More like an anti-climax, right? Just when everyone started talking about this being a raging bull market and bulls charge ahead, and that's when, bam, you get that sharp sell-off. But I guess that's how the market works. It never obliges really with what you want to see. In any case, I mean, it was a steep sell-off across the globe. And, Anuj was talking about the Dow. The Nasdaq is well down 2.5%. All 11 S&P 500 sectors ended in the red yesterday. So it was pretty broad-based. There was a decline in IT. There was a decline in consumer stocks. Zoom, by the way, the share slumped quite a bit after they cut their profit, full-year profit forecast. There are, of course, those headwinds. For our own market, too, the Nifty closed below that 17,500 mark yesterday. Both foreign and domestic investors sold in the cash markets, and it was the biggest fall in the last 2 months. So the question now is, has the rally hit a bit of a pause button? And should we expect some more in terms of profit taking, right? I mean, that's the big question. There seems to be no cues as well, major trigger for the market now. So how does one approach it?
Yeah, I think pause it clearly is. Whether it's a halt or not, I think that's something that, you've got to keep an eye on. Look, Sonia, the markets got the fear factor back. I give a lot of importance to what happens to the volatility index in the US, the CBOE VIX. That surged 16% yesterday. I think while the equity markets go up and down, that tells you a bit about that fear factor. Now, if you look at close to close, I don't give too much importance to intraday levels. If you look at close to close, Nifty is right now sitting exactly at 33% retracement of the rally. The rally was big, but just in 2 days, we've given up 33% of that, close to close, almost. That level is 17,465. So the market has to bounce. Today has to be the day, and it has to then sustain above 17,465, because if it does not, then it opens up not only the 20-day moving average probability of 17,340, but also the 50% retracement of this rally, which comes in at 17,220. So all these levels are nearby, within 200, 300 points of each other. So that's something that you've got to keep an eye on. FIs have started to sell again. In fact, in 2 out of last 3 days, FIs have been selling. And the point I made in last week's Editors Roundtable as well, the decline started with Bank Nifty. When the market leading sector leads the decline, you've got to be a bit cautious. In fact, over the last 2 days, you've seen a over 1,000-point decline in the Bank Nifty, which now has the 20-day moving average. If you look at the simple moving average, that's at 37,950. If you're a fan of exponential moving average, that's at 38,050, or I mean, vice versa. But that's the zone which you've got to keep an eye on. The US market, especially the Nasdaq, is showing classical sign of end of a bear market rally. And in that sense, our market has been stronger than the US markets. Obviously, you can't entirely correlate, but if the US market has to make the fresh lows, then I think for our market as well, there would be some problem. But for that to happen, you will need to close below 17,220. But this is funny kind of a market. It just makes you change opinions so fast. Just 3 days back, almost all of us were looking at, the market hitting all-time highs. And look, all of a sudden now everyone's wondering whether it was a bear market rally, and it's ended. So opinions change faster, and, the markets make opinion, right, Prashant?
Oh, absolutely. I mean, prices lead and opinions follow. I remember Warren Buffett's I think it was his first television interview. He was asked, do you think the market was correcting at that point? He was asked, do you think this market correction is an overreaction? And he said, well, it is an overreaction which is correcting a earlier overreaction on the upside. I mean, so I think it just kind of struck me that maybe we're in that kind of a phase. At 15,200 or whatever, it was too stretched on the downside. And then very quickly we came back to 18,000, which was also perhaps a little excessive. Also, and we are correcting that.
I love it when the market falls is when people remember Warren Buffett quotes, right? for long-term investing.
Oh, yeah. Oh, yeah.
It's bang on time.
I don't think we're there yet, right? Just 500-600 points, not even that actually on the index. Let's just take a quick look at the setup. It's been a disruptive start of the week, absolutely no doubt about it. The two things which sort of we've been highlighting is actually three. The Nifty, which has broken below important trend lines, which you can kind of draw from the all-time highs of 18,604. We are firmly below that. So that is one. The dollar is at 109. The DXY index, actually, it's of course firming up against everything else across the board. I mean, the euro has broken parity against the dollar. The Japanese yen is at 137, 138, and you can go on. I mean, the rupee, for example, here. So dollar is firmer. Oil prices is the other one, and we were talking about how oil may be coming alive once again. Yesterday, oil was down 4% when trade started in New York. By close, it was absolutely unchanged, which means it recovered 4.5% from the lows of the day. And that is on the back of statement, which is surprising. It was Saudi Arabia's energy minister who said that because of all of the volatility, they feel that oil prices are unhinged from the realities and the fundamentals of the oil market, which remains tight. So oil should not be here, it should be higher. And they are considering, and they hinted at a potential cut in output on the 5th of September when OPEC Plus meets. So we will see. Oil is an important variable. Yesterday we had Lawrence Blanco who said technically maybe, oil's back headed back to about 115 odd kind of levels. We will hear from the Fed Chair Jerome Powell on Friday at Jackson Hole, and I think that's going to be. But I think with markets correcting, the bar for hawkishness is high now. I mean, it's not low. It's not as if the markets have been rallying and then Fed Chair comes and says something which will disrupt things. I mean, we already disrupted, whatever little degree, but we're already disrupted. So the bar for that to do any real damage on Friday is a bit higher than it was last week. The 20-day moving average on the Nifty is 17,340. So let's see, I mean, we find any supports of that around there, or we head to about 17,100 before we get a bit of a pullback. I mean, these levels are the way markets are reacting, not very far away. So I don't think we'll have to wait very long to find out. Sonia.
Okay, absolutely. Also want to point out that there's the Jackson, as we said, there's a Jackson Hole symposium. I mean, nothing really comes out of that, which is market moving, but it's good to at least track what's happening over there. And keep an eye out on Brent crude, once again back above $97, almost at $97 a barrel. So we'll be...
Sonia, this is interesting, right? The Jackson Hole, we all say that nothing comes out of it, but still every year we keep an eye on it.
Every year we keep an eye, every year we track it minute by minute, and every year we end up saying that, there's no impact.
Also, it's like,
It's like the budget.
It's like the budget. It's like Davos. So many of these things, every we say, lot will come out, but actually nothing comes out.
And every year we start the budget by saying that, the budget is a non-event for the market. And then we cover it for the whole day.
But because, that's...
it's a financial statement.
Yeah, exactly.
So.
At the end of the day, that makes us money, right?
Okay, well, it's different, right? I mean, finance, macros, markets are a different
everything.
beast altogether. Okay, well, we'll tell you all the cues that you need to watch out for as we head into trade today. The SGX Nifty for now is indicating a weak start. On the equities front, though, first up, we have Varun Lochab of HDFC Securities, who says that India's long-awaited capex cycle finally seems to be gathering momentum after a hiatus of 10 years. He says while there were false starts in the last decade, they believe that the recent post-COVID pickup is looking sustainable and drivers are in place for a multi-year growth. Their top picks within their coverage universe to play this multi-year theme are financials like ICICI, Axis Bank, Capital Goods, Infra, L&T, Siemens, Cummins, GMR Infra, and capacity expansion-led volume growth in Ultratech, Dalmia Bharat, Navin Fluorine, RT Industries, NTPC, Phoenix Mills, and Havels India.
Okay, on to a quick macro view then. Eric Fishwick of CLSA says that their central case remains that the US dollar remains well supported until growth risks rather than inflation risks drive US rate expectations. He says there is a risk that the US will see labor market strength dissipate surprisingly quickly in the second half, and that the National Bureau of Economic Research retrospectively declared that a recession started in Q2 FY22. But for the moment, he says growth worries are greater still for Europe and China. He advises to stay long US dollar for a while longer and that they will reassess their stance after the Fed raises rates at the September FOMC meeting. Sorry.
And let's get you some money market views as well for the day. Bhaskar Panda of HDFC Bank says all eyes are on the forthcoming Jackson Hole conference where Fed Chair Powell could spell out the future path on rate hikes in the US. Positioning ahead of this has pushed the dollar index higher. Risk-off sentiment prevails, especially in Asia, as China grapples with a slowdown. Crude oil prices rallied a little from recent lows. Given this global background, the dollar-INR pair could again try to test the 80 mark today. He expects the day's range to be 79.75 to 80.
Well, on bonds, Bhaskar Panda says that Indian benchmark bond yields have remained rooted around a narrow pivot, and recent remarks show that the fight with inflation will continue. He does not expect much volatility as the 10-year benchmark yield trades in a range of 7.25 to 7.3%.
Okay, so we have a lot of stock-specific action to track today, and we'll get to that in just a bit in our top 10 segment. So we're looking at Maruti Suzuki, there's Arvind, there's Gokuldas Exports, Welspun India, Sterling and Wilson, Adani Ports also on our radar. All of this on the back of positive news flow. There's also Infosys, Asian Paints, Berger Paints and Devyani International. These are likely to open in the red today.